Good afternoon. Let me go ahead and call this special meeting of the Rio Grande City Gruya Independent School District to order. We are November 16, 2021. It's 12 o'clock noon, and we're at the RGCGISD Family and Community Engagement Center located at 1 South Fort Ringgold, Rio Grande City, Texas. Section number 1, for purposes to determine that we have a quorum. Let me go ahead and take roll call. Mr. Lezada Velasquez Jr. Sorry. Mr. John A. Pope IV.
Present.
Mr. Noe Castillo.
Present.
Mr. Basilio D. Varela Jr.
Present.
Mr. J. Peña.
I'm present.
And myself, Eddie Ramirez, present. Let the minutes reflect that we do have a quorum. Before we proceed to the Pledge of Allegiance, we do have to state that we lost a precious soul a couple of days ago in Mrs. Norma de Leon, computer lab teacher, employee for the district for at least 19 years, if I'm not mistaken. In all accounts that I've heard, she would go out of her way to help anybody and anyone that whoever asked help from her, and it's such a tremendous loss for the district, and I'd like everybody to join us in a moment of silence. She is survived by her husband and 4 children, and our deepest thoughts and condolences and prayers are with them. Thank you. Section 2, Pledge of Allegiance. Mr. Pope, will you help us with the Pledge of Allegiance? Thank you, Mr. Pope. Section 3, recommending approving the consent agenda. The board has agreed to discuss the following items. All of the items below that are not called out will be approved by consent. Consent agenda consists of 1 item, consider take possible action on travel requests from Curriculum and Instruction Department. It's Part A, and Part B that have to do with e-grants, traveling to Indianapolis, Indiana on 1, for November 17, 2021, and Atlanta, Georgia, on December 5th, 2021 through December 7th, 2021. Do you have a motion or any discussion?
Mr. President, I move that we approve consent agenda item 1.
There's a motion by Mr. Varela. Is there a second to that motion?
I'll second.
Second by Mr. Castillo. I do want to state, though, that this the costs are covered by the grant. Is that correct, Mr. Peña?
Yes, sir, that is correct.
So there's no cost to the district for this travel?
No, sir.
All right. All those in favor so signify by raising your right hand. Same sign, motion carries. Action item number 2, consider and take possible action on acceptance of the annual financial audit for the year ending June 30th, 2021. Do I have a motion or any discussion on item 2?
You need to give a presentation.
Oh, yes. Go ahead, Mr. Hernandez.
Good afternoon. I brought actual hard copies, and hopefully everyone has one. I understand you've had an opportunity to review this in advance as well. However, if you have a question at any time, please interrupt and ask the question. I certainly will try my best to answer the question. If not, staff is here, and certainly they'll provide assistance. I'd like to begin on page 16 of the audit report. And as you turn to page 16, just for the record, the auditor's opinion is unmodified, and that translates into a clean opinion. Page 16 is the statement of revenues, expenditures, and changes in fund balances for your governmental funds. This is for the year ended June 30, 2021. The first column is your general fund, the second column, your debt service. The third column contains all related funds. And as you turn towards the back part of the report, you'll see that these other funds will unfold individually. The last column is the total of all. The first column, the general fund. Total revenues were $112,126,347. Expenditures under line 6030 were $112,191,271. So pretty much close to breaking even. You'll note that expenditures did exceed revenues by $64,924. Any questions on this so far?
No, sir.
As you look further down, you'll note that you had other financing sources and uses of monies. The first item under account 7913 are capital leases. Now, these are considered proceeds. And understand that a capital lease, when you purchase an item, it's financed. But under modified accrual basis, it requires that you record the proceed, and at the same time, you record the expenditure of the item you purchase. And the item is outlined somewhere through the functions above in the expenditures. Nevertheless, you still have the proceeds. Now, in addition, other resources under account 7949, you receive $3,526,125. Majority of these monies are related to the wind farms. And these are broken out over on page 51 of the audit in the notes to the financial statements. So if you want to look at a breakdown on page 51 at the very top, you'll note that $2,377,857 came from the Mestano Wind Power LLC, $1,043,268 came from Duke Energy, and $105,000 from the Hidalgo Wind Farm LLC. So these monies came in after your normal budgeting process. This is after your normal recurring revenues, recurring expenditures, and they're considered other sources of revenue. Any questions? You had transfers out of $429,586, and you're going to see the offset to the right shown as a positive. Those monies went into your capital projects fund. So as you move further down under item 8912, you see there's a negative $1,714,323. This is monies going out, and I'm sure everyone is aware that these are related to the incentives that were paid for early departure of employees. And it's considered a special item because it's not recurring.
So basically, this is the incentive program.
That is correct. Money's paid out. So the bottom line is this. You had a net change or an increase to your general fund of $1,480,542. You started with a fund balance of $40,855,774, and you ended with a fund balance for the general fund of $42,336,316. Questions on the general fund?
Just out of curiosity,
Yes.
when we projected our budget, or Ms. Robles, when we projected our budget, did we project a zero at the end of, in other words, when we do our projected, not balance, but our projected financing, did we project to go to zero, or did we project a minus balance, or zero? That's for the year. So our projection was, like this year, we're a little bit on the negative side, I guess, right? But that particular year, we projected zero to be zero. So we missed we only overspent by $69,000, correct? Which is not bad. Okay, that's not bad.
And you'll see the detail to that on page 52. 52, you'll see that the original adopted budget did zero out. And as you amended the budget, you anticipated spending money as a result of the pandemic, not knowing that you were going to receive emergency funds. And you did. And you'll note that the expenditures under account 6030, that were budgeted at $125,900,000. However, you only spent $112 million in the general fund. But keep in mind that these expenditures were moved to these other funds, funds 281 and 282 and 289. So these monies, as you received them as emergency funds, you also moved out the actual expenditures. So that's why you'll note under account 6030 to the far right-hand side, the variance, the positive variance of almost $14 million. And again, I'll repeat myself because you moved out the expenditures from the general and you moved them into the special revenue funds, where you
Okay.
receive the emergency funds.
And we're
The
talking
ESSER
about the
funds.
ESSER funds, or what are we
Yes,
talking?
ESSER funds.
Okay,
Yes.
so basically what you're saying is, we took monies that we're going to pay out of the general fund, and we moved them to the ESSER fund.
Exactly. You were going to spend the money, understanding that you needed to and hoping that you were going to receive these ESSER funds. You did receive them. So when you did, management transferred those expenditures and matched them to the revenues.
So basically, it
separately.
was a wash with what we spent and the ESSER funds,
That
more
is
or less?
correct.
I have a question. I might be getting ahead of myself here, but, because I guess it'd be making reference to the balance sheet. But when we do have ESSER expenditures or expenses that we suspect are going to be paid from ESSER, did we account for them as some type of, as maybe like an asset, like a money due to the school, or did we just, as a receivable, thank you so much, or how did we account for that, or do we just,
The monies were received as revenues, and then certainly since you had spent the money in the general, those expenses were basically moved into those three funds.
Okay,
To
so it's
match
gonna-
against the revenues.
so it's going to be reflected as a cash flow action on this
That is
statement?
correct.
Got it.
Back to page 16 real quickly. I just want you to note that the second column at the very bottom, your debt service ended with $9,332,993, but certainly under accounts 0071 and 0072, you're going to note your debt service. You paid $5,500,000 for principal and $3,191,000 for interest on your bonded debt. But you still ended up with $9 million. Sounds like a lot of money, but knowing that you're going to pay it out in the following year, it's important that you have surplus funds in your debt service.
So let me ask, I know that on the $9,332,000, that's how much we paid out, but doesn't the state provide half the funding or things of that nature in that, or is that?
That is correct. And on page 16 at the top, under account 5800, you'll see state revenues, $3,619,000.
So that's how much they pay out of for the bond, correct?
That is correct. That is, if you
So they
want
pay
to call
about
that.
40% more or less, give or take?
Yes.
Okay.
Any questions? Real quickly, I know, is it Mr. Peña asked about the balance sheet. On page 14, you'll see the balance sheet again for governmental funds. And again, you'll see the general fund, the debt service, and all the other funds. The very bottom, under account 3,000, again, you're going to see the fund balance for each respective fund, as well as the total of the others. You'll see how the fund balance is broken out, but in particular, at the very top as well, the ending cash balances. Any questions on this?
Let me ask one question. It says total fund balance, $42 million, and then on the very bottom, it says total liabilities deferred, inflow, and fund balance, 64.
Yes.
What does that
Because-
represent?
Because the accounting, first thing we learned in accounting as accounting students is that assets equal liabilities and equity.
So on 64, we haven't taken away the liabilities, I guess.
That's, if you'll look at account 1,000, You'll see those are your total assets.
Okay.
And then as you look down to account 3,000, you have your total fund balances. But then you have account 2,000 liabilities, and then account 2,600 other liabilities. So when you take your liabilities and your equity, essentially that's going to equal your total assets.
So our fund balance, am I correct to say our fund balance right now is 42 million?
That is correct.
That's basically, that is our fund balance, correct?
That was your fund balance at the end of June, moving forward to the following
Exactly.
year for the general fund.
Okay.
In total, it was 52,042,900.
So the total deferred inflows is it just to reconcile?
That's a new accounting pronouncement that says essentially this: when you report your property taxes, you must defer them. And that's, again, it's just an accounting pronouncement. In normal accounting, if you have a receivable of taxes, you record revenues and you record the receivable. In this case, you don't do that. You defer monies and you only report them as you collect them. That's not modified accrual basis.
Is this the first year that this thing reflects, I know we changed our fiscal from August 31st to June 30th, correct?
Correct.
So is this the first year that reflects that change or
The
not?
first full year that you
That
have
reflects
12
this
months.
change? Okay.
Last
So-
year it was 10 months.
Okay, so exactly, okay, last year was 10 months, this
That is
year's 12
correct.
months.
Yes,
So there's nothing pending, this is what it
No.
is? Okay,
Right. Understand that page 14 is as of that one date,
Okay.
June 30. What I talked about at the beginning encompasses 12 months of activity.
because the first time we did it was 10 months, correct?
That is correct.
Okay.
Any other questions? Let me just cover 2 more pages, because I always talk when I present a governmental audit, the requirement is that you present modified accrual accounting and full accrual accounting. So modified accrual accounting is it's closer to cash accounting. And full accrual is an accounting basis that all for-profit companies use. For example, Exxon, your blue chip stocks. Anyone on a full accrual, these financial statements are comparable to that, beginning on page 13 and back to page 12. Now, page 13 is your full accrual accounting presentation. So you have depreciation expense in here, while earlier you did not. Earlier, you might remember you recorded proceeds of financing. Here, you report them as liabilities. And here as well, you report all your fixed assets, because the full accrual accounting says you must do that. Now, on the line CN, change in net position, on the full accounting, you had a profit, if you will, of $1,919,997. You started with a net position of $43,444,059, so you ended with $45,364,056 under full accrual accounting. What does that say? Let's go to page 12. On page 12, again, you're going to see at the bottom the same $45 million. But as you look up, you're going to see the breakdown. In particular, starting at the very top, line 1,000, total assets. What is different here is this includes all your fixed assets, beginning with account 1510, 1520, all the way down to 1580. Fixed assets, all your infrastructure, your buildings, minus accumulated depreciation. Down towards the bottom, what's new here are accounts 2501, 2502, all your bonded debt, your long-term debt. Now, you have debt of almost $100 million, and you have total assets of $251 million. You have other liabilities, But again, the bottom line, the net equity or the net worth, if you will, is $45 million at the very bottom. Any questions?
So when you treat this, like I said earlier, I know you're saying our net position is 45 million, that includes buildings and things of that nature.
Yes.
But in a way, are you including, like we say, the state pays on the INS side, they pay 40%. Does that 45 million represent that the state is contributing more or less 40% of the?
It includes that. It includes all your state and federal monies received, the net effect. So you started the year, if you will, back on page 13 with 43.4. Your profit, again, if you will, was, or the increase was $1.9 million as a result of all the revenues minus expenses during the year. So it ended up at $45 million.
Like you said, like it says here, the bonds are $95,146,000,
Yes.
right? That's how much we have in bonds, but yet those bonds, if we look at them in the future, the state's paying 40% of those bonds, correct? Out of the 90,
Yes.
right now, basically.
Every year you get about $4 million
yeah.
as a subsistence, if you will.
Yeah.
from the
So,
state.
but that doesn't reflect that, correct, the $95 million? In other words, $95 million is our liability, but
Right.
it's still not reflecting what the state's going to give us.
It's not reflecting it because you've already received it and spent it.
Okay, we already received and spent it?
Yes,
Okay,
in the fiscal year.
okay.
So it is about $100 million because you're looking at the 95. Right above that, you'll see the current portion of 5.
Okay.
So
but-
about $100 million.
And I know we received it for this year, okay?
Yes.
And spent it, but
Correct.
we haven't received it for the following years, right?
No,
Okay, and that's why I'm saying that $95 million reflects many payments that we have to give in the future, correct?
that is correct. That is outstanding balance at, again, at that particular day.
Right.
June 30.
Right. And all I'm just saying, it's not reflective that the state has given us, in other words, anything, like, for example, the state pays 40%. But
Yes.
it's not, in those $95 million, it's not reflective of future payments that the
No.
state's going to give us.
Correct.
Okay.
And
So-
what
so
you're
it's-
talking about,
Yeah, so it's kind of a little bit off because if the state's going to give us, give or take 40%, they're going to give us approximately $40 million that is not reflective in those $95 million, correct?
right.
Okay.
And the reason you don't is because accounting.
We haven't gotten
principles- Well, accounting principles say you can't.
Okay, and we have not received that
We have to be
money.
consistent in how we report these.
Yeah, but all I'm saying is, out of those $95 million, the state's going to give us 40, give or take. So really, our indebtedness is about $55 million, because the state's going to give us $40 million. Okay.
Is it possible to include a footnote? We can include it as a footnote, maybe.
I'm sorry?
Is it possible to include a footnote on that debt?
Well, the debt is disclosed.
Okay.
The long-term, the debt service, the future interest payments, principal and interest is disclosed within the notes to the financials.
The only thing I'm not trying to be difficult, but you see $95 million, but the state is going to give us, give or take, $40 million, give or take. So really, our debt, our real debt as we move forward is about $55 million. And I know we haven't received the money, but
No.
that's the way it's kind of structured as we move forward.
Right.
Okay,
Well, but one is certainly assured that you have to owe it.
right.
The other one's not assured that you'll continue to get it.
We better get it.
Yeah.
I got you.
Yes, sir.
Okay.
Any other questions?
Another question?
Thank you.
Thank you, Mr. Hernandez. Appreciate it.
That one question before you leave, sir.
One more question.
Any findings?
No findings.
Okay.
I honestly looked at the overall, financial statement. I'm not here to give you a financial analysis, just to tell you that in auditing the finances, the financial statements, management did a good job in balancing out their accounts. We were back and forth with some change into accounting treatments that weren't significant, but it was just a matter of presentation, but no findings that came to our attention. Our focus is certainly to perform an audit. As we perform the audit, we don't evaluate your internal control, but as we perform the audit, we do look at internal control. Nothing came to our attention that warrants a finding in writing, nor and one that's oral, where I would tell you or caution you to be careful moving forward. No, sir.
So would it be fair to say that we increased our fund balance by $1 million and some dollars, we're at $42 million, that you didn't find any findings, and that we're in a great financial position right now?
Well, great financial position.
Or a good financial position, maybe?
You know what? I know I'm taking too long here, but let me have you answer the question by walking you through page 12, real quickly. I did think about, when I saw this, the situation, page 12, again, talking at the very bottom, $45 million. So we know you owe $100 million. So when you do accounting equations, the one that I kind of do in my head or look at is your debt-to-equity ratio. I know you've heard about financial ratios, current ratios, sales ratios, et cetera, but your debt-to-equity, which means, or asks this question, of the debt you owe, how much of that dollar does the bank own or your bondholders own? So when you look at your total debt of $100 million and you divide that by the $45 million, they own the entire dollar plus you owe another dollar. Now, that's not necessarily a bad thing because this debt is going to be paid over the longest term. I think by the time this debt is retired, I think it's safe to say that most of us are not going to be here because of the number of years that is going to be required. And in addition, new members will come in and acquire new debt to invest. So the $100 million was invested, and that's why you have the fixed assets. Now, you pay your bills on time, you got through the pandemic, and you still have a healthy fund balance in your general fund, and you even refinance new debt. So your bond advisors weighed your financial situation, and you were able to refinance at a lower interest rate. If you look at the notes to the financial statements, you're going to see your interest rates relatively low. Why? Because they consider you to be financially stable, if you will. So they would be best to answer that question. I'm just trying to show you what the numbers are.
The only thing, I guess, and I hate to keep harping on that thing, but out of the $95 million, and I know it's showing that's what we owe, but the state has basically committed to pay 40% of that $95 million, which doesn't show here in this thing, correct?
He wants the footnote.
No, I'm just saying, but you understand what I'm saying, right? The state has committed to pay 40% of the $95 million, but it's not showing here that it's doing that. Anyway, Ms. Robles, congratulations, great job. No findings, how many million dollars? $42 million fund balance. No findings, congratulate to you, or Chris, and all your staff. I think you did a fantastic job. I mean, $42 million in the bank, no findings, and we're in a good, healthy position. One quick question. How many months of, does TA require us to have as far as fund balance? How many months?
3 months.
And how much is 3 months? How much would 3 months be for us? 25? So we have well in excess of the $25 million, correct, Ms. Robles? Thank you. You did great job, all of you, okay? To your staff and everybody.
Thank you again, Mr. Hernandez. Thank you so much.
Thank you.
Good job.
All right, on that note, do I have a motion or any further discussion on item 2?
Mr. President, I move we approve item 2 as presented.
There's a motion by Mr. Varela. Is there a second to that motion? Second by Mr. Velasquez. All those in favor so signify by raising your right hand. Same sign. Motion carries. Item 3, consider and take possible action on amendment of TASB DEE regulation, compensation, and benefits expense reimbursement. Do you have any motion or any discussion on item 3?
Well, I move we approve item 3 as presented, but with discussion.
Okay, is there a second to that motion?
I'll second that motion.
Second by Mr. Pope. Go ahead, Ms. Jimenez.
Good afternoon, Board President, Mr. Ramirez, Board members, and Mr. Peña. We come to you basically on this to see if we could, not necessarily just the DE regulations, but we're looking at all the DE regulations, the local, the legal, the regulation, and the exhibit. And we'd also like to add student as well, the student travel, and that's the FMG local. What we've noticed here is that, like the exhibit and the regulation, the regulation has not been updated since 2013, and the exhibit has not been updated since 1993. And some of these mileages, for example, have been increased. Our GSA rate has gone up. And so when our employees are traveling, we are, at a smaller amount. And that's what we want to make sure that we are just kind of keeping up with the rates as well as in the GSA per diem rates. So that will help, our employees that are going for school business increase in their mileages, their hotels, and also their per diems. And most of the time, especially like when our extracurriculars go out and the advanced, we're also having that same issue with our students. We do try to give them the most that we can, but we're wanting to make sure that we can also include them as well. That way, when employees do travel with the students, we are looking to increase that one as well.
So we're going to increase it from what to what as far as the mileage, could I ask?
Well, the mileage right now is the 50-cent rate,
Okay.
and it's already at 56 if you're traveling in your own vehicle, anything to that effect. But we'd like to keep up with just that GSA rate, which right now is .56.
Is it, I've been told that, well, gasoline is at, what, $2.99 a gallon? And I hear hotels are very expensive, it's hard to find these days.
They are very hard to find, especially when you're trying to find it on the GSA rate of it. And sometimes, just like, for example, with this one that we have, when you're told from one day to the next, look for a hotel, look for, all the venues that you're going to need, that is very hard. We try to tell them to get that, rate, and sometimes it's just not cost effective. Also, we're looking at to see if we can also include the host hotel, because in any of the conferences that we go to, as far as school employees, they offer the host hotel has a different rate, and that is a big block. And what does help us with that is, people are able to go into that hotel and go down to their clinic, go back to their room. That also helps, but it's always a different rate than the GSA rate. So we could also look into the host hotel giving us, or we are able to at least get that host hotel rate just when we're going to any of those trainings or school business. That would also help.
I think where we get caught up, correct me if I'm wrong, is that, let's say you're going to go to Chicago or let's say Washington, D.C., the hotels are there quite expensive.
They are, and we've learned that any out-of-state like this, they don't take our, of course, state tax exempt. So we're also looking at the taxes on those. We also want to see if we could include that as well. So with the taxes of that state coming in, then it'll allow us to kind of give us a little more clearer picture of the out-of-state rates that we're at, plus include our taxes, which would be the state taxes on the out-of-town, the city taxes, sometimes there's county tax, and there's occupancy tax. All those taxes, we would also like to make sure that they're included, so that when a employee does travel, we're not having to pay so much of all of that just to try to go in, either a training or any of the out of business.
All right. Any further discussion? Thank you, Ms. Jimenez. All right, there's a motion by Mr. Varela, it was seconded by Mr. Pope. All those in favor, so signify by raising your right hand. Same sign, motion carries. Item 4, consider and take possible action on the Winter Festival of Lights additional expenditures. Is there a motion or any discussion on
President.
item 4?
I move that we approve item 4, 5, and 6 as presented in our board packet.
There's a motion by Mr. Varela to approve items 4 through 6. Is there a second to that motion?
I'll second that motion, subject to quick review of the addendum.
Sure. Okay, there's a second by Mr. Peña. Any discussion on any particular item?
I think we added something right now.
One quick question, just on the baseball field. It is, where this change order is for which fields, Mr. Ramirez?
Yes, sir. This change order will be for the Gruya High School baseball and softball fields. The original contract with Hellas Construction did not include the perimeter side fencing for those fields because upon inspection during that time, the fence looked good. It's only 10 years old. But upon removing the fence, we find out that part of the bottom part of the fence, 18 inches of the fence, was underground or under dirt for so many years. So it's starting to corrode, and it looks ugly. The new fence is going to be placed right on top of the cement, so it's going to look like, so we have the option, one, to power wash it, to repaint it, or to replace it brand new like we're doing with Rio Fields. So upon discussing this with Mr. Peña, the recommendation was to include it and replace it brand new.
Some of the corrosion was due to COVID, right?
Well, do it close.
But they're working with us, right? I think I read some of the meshing was, they're not going to charge us on labor costs.
The labor is not included,
Yes, sir.
sir, because the labor was already included with the original contract
On the second part.
to take down and replace the old fence the way it was.
Got it.
But like I said, the old fence was, it's starting to corrode in the bottom, so it's going to look very nice. So the recommendation is to replace it with brand new vinyl fencing.
Agreed.
Was that included in the budget? Because I know it's Proposition E, if we went out for bonds. Is that included in the actual bond amount?
I believe not, sir, because the original bond did not cover the total expense for the 4 fields. The financing for the difference was financed. Ms. Robles and Mrs. Jimenez, who I guess went out for the additional financing. And I'm not sure they're going to use local funds or include that in the financing for the total project.
How much is it?
20,625, if I'm correct.
Yes, sir, it's 20,000. Let me get that amount for you.
$20,625.
We have a fund balance of $42 million, so I think we can get it out of local funds.
Let's hope. All right, any other discussion required on any of the particular items? All right, there being none, all those in favor so signify by raising your right hand.
I'm going to abstain by item number.
Same sign on items 5 and 6. Item 4, it's 5 votes in favor with 1 abstention. Mr. Noe Castillo on item 4. The motion passes. Item 7, consider and take possible action on civil engineering and land surveying for Fort Ringo streets and drainage. Do I have a motion or any discussion on item 7?
Can we hear a presentation?
Mr. Lopez, go. You may
Yes,
proceed.
Mr. Board President, members of the board, Mr. Peña, Superintendent, we met with 2 engineering firms in regards to our drainage issues and concerns here at the fort. The plan was to meet with 3 engineering firms. One of them did not show up, so we ended up going around the fort with 2 of the firms, and we were going to wait for proposals from both firms. Then we found out a few days later that those 2 firms decided to join together and do the project as one. One of the firms will be taking the lead, and the other firm will be assisting the firm that will take the lead.
What are the firms' names,
Yeah.
could I ask?
I'm sorry?
The firms' names, what are they?
The one that will take the lead is R. Gutierrez Engineering Corporation. They are currently the engineering firm that will be helping us with Gruya Middle School and with the MPC. And the firm that will be assisting them is CLH Engineering. They are currently the firm that is helping us with the canopy situation at Gruya High School. So they are both already here with us in the district, and they were the 2 firms that, decided to show interest with this project.
So when you say they haven't submitted a proposal, we haven't even figured out what the actual amount that they're going to charge?
No, we have not. Once, if it is board approved, from there, we will go into looking to get in agreement with them, a contract with them, and then from there, we tell them how far. It's a big fort. We do have 2 priorities that we're looking at when it comes to the drainage, that being right in front of the auditorium and this street right here in front of us, and I'm sorry, I don't know the name, but right here, this street right in front of us that leads to Magnet Elementary. We do,
So let me ask you a question, Baltasar. If we approve it, don't they have to bring the proposal back for approval or not?
That's correct. This is just to approve them as, basically as vendors under their request for qualifications,
Right.
basically.
No, but the question that I have is basically, wouldn't it be best to have them each submit a proposal and then figure it out from there whether to combine both of them?
Right.
Because let's say, for example, if we were to have one company that submits a proposal, a number, I don't know the number, but $40,000, and company B submits $45,000. But then you say, I'm getting both companies and they're submitting a proposal at $60,000. So wouldn't it be best to have both of them submit independent proposals? Because that's the whole thing of competition.
If I may, Mr. Pope, I think the key to it is you need to define the scope of the project. Because you're right. If right now it could be 1 million, it could be 20 million. This is a very big fort as far as what the scope is. So I think you need to define the scope and say, we're going to get this street and that street, or these are our priorities, and we need to figure out the scope and then figure out the details. Then you can go back and say, okay, you guys bid on it. And that way you have some competition. Because the other way, we're almost signing a blank check. We're saying, okay, you're approved, it's just a matter of how much we're going to approve you for. So I think the key to it is that the scope of the project must be defined. Not only is the scope, but also the quantity. So if you're going to, the more you do, the more it's going to be expensive. So,
But my understanding was when it was mentioned, it's saying one's going to take the lead and then the other one's going to be right under it. So we're already defining the scope that they're going to work together.
well, that's what the recommendation, that's just what administration is bringing. You don't have to approve it. You can say, no, go back to the drawing board, give us the scope of the project first, so we know how many streets, what's the drainage. I mean, it's not raining today, so it's not something that we've got to do right now. So at some point, it's got to be addressed. I mean, eventually.
Why don't we do this? Why don't we just table the matter, have them, because there is a, more or less, a, what do you call it, a norm for what engineers charge. Why don't we table it today and then have them bring a proposal to us and see how much they're going to charge us? And then we'll find out if that's a norm or not a norm. Basically, like architects charge between 6 and 7.5%. But my question is, why don't we just table it, have them present a proposal, and then see how that reflects according to the norm?
Or just to clarify, we're moving forward with these companies, but then we can move forward and then decide from that point.
Right, well, let me just define one thing real quick. Well, this is a request for qualifications. So they're giving us the qualifications. When you do a request for proposals, like Mr. Vidal says, then you're saying, okay, you bring us a proposal that includes these two streets or these two drainage projects. And put the burden on them to come and give you a scope of project.
In other words, even if you approve them today, let's say you're approved, they still, that proposal that has to come back to us and say, we're proposing that we're going to charge 6.5, 7.5. We can actually say, we don't agree with that proposal, we want somebody else, simply put. But it's basically giving them the ability to, I guess, make a proposal because, or including them as somebody who can give us a proposal. Now, the proposal doesn't have to be accepted. Now, there is norms for architects, there's norms for engineers, and we can find out what the norms are, and if they're out the norms, we can say, no, that's too much money.
And I'll just add something for the record, if I could. And I'm coughing all over the place, and I'm sorry, I've already tested twice, I'm negative. I'm trying to be extra cautious, because I know President Ramirez has a newborn baby, so I'd rather get Elias sick. I have no objection.
I'm glad you put that out there because there's going to be, there's a
I'm
gap
kidding,
here.
he knows, I'm kidding. But I have no objection to the companies. I joined in John for a different reason, though. The contract, I'm just curious to see what that's going to look like,
Right.
because obviously it's a joint venture.
Correct me,
Right.
all we're
Right,
doing,
but
yeah, all we're doing is them giving the opportunity for them to give us a proposal, correct?
Yeah.
Baltasar?
Right, because the contract doesn't come until we have the scope of work.
Yeah.
So we're kind of putting the horse before the carriage, the carriage before the horse, because we need to know what the scope of work is. Then we can give a contract if the board approves them. So we don't know that. Those are an answer. I just don't like giving
I
blank
know
checks.
it could increase their costs possibly, because I know eventually they're gonna have to vet out the situation, for example, like who's gonna assume primary liability, secondary, all these other things. And I'm just assuming that maybe that, I don't know if they're seeing that far ahead, or, I don't know how that's gonna impact the cost, but
So-
it'd be for a different reason. But, I mean,
Do-
I think the companies look sound.
Okay, do you want to approve it and then bring the proposal back to us, or? And then we'll see if it's good or not. In other words, there's a norm, and if they're out of the norm, we just say no and let's go to somebody else.
And again, the key is going to be the scope of the project.
Okay.
Have we ever had anybody venture in like that before? I don't,
What's that?
a couple of vendors venture in on a proposal?
I mean,
Has that
we-
happened before?
Yeah,
with us?
it has, joint
Okay.
venture, but we do it, when we build a school, we do it all the time. It's a
Got it.
joint venture between the contractor, subcontractor.
Perfect.
That's
Can I-
not an issue.
Can I make a motion then to approve the recommendation with the idea that whatever proposals that are proposed come back to the board and we have to approve whatever proposals and rates and things of that nature?
Or for them to submit separate proposals.
Yeah, okay, and I'll amend it to say to possibly if they can submit separate proposals. In other words, instead of being together like John says, well, let me do this is what I charge. Let me do that, this is what I charge, and see what comes out.
Then there's no competition.
Right. And
If
my,
you get one proposal, then we have to accept it.
right, and I've voiced this before, Mr. Pope, and I'm not a board member, but I have to look out for the district's best interest. My concern is that it's $1 million project, and one side says, well, I'll charge you the going rate, 6%, and the other says, I'll charge you 6% too, and we end up paying 12% on a project that should have been done by
Well,
one company at
yeah,
6%.
but-
That's my biggest concern, and we're trying to address that. I've been talking to the superintendent about that.
Yeah, the only good thing about it is that we get to see it before in other words, we're not giving him a blank check. We're just giving the ability for them to make a proposal. Now, in that proposal, they bring 6 and 6, we say, no, get out of here. But if they bring 6% and that's a norm, then I'd say that's pretty good.
And that scope of the scope of the project would also include a contract, and that's the one that I would
Yeah,
review.
exactly.
And that would have the percentages, and any, cost involved.
So, again, I'll make a motion that we approve the presentation that he said with the idea that whatever proposals are brought back to the board, with the idea that, like John says, if they could actually maybe split up again and give us different proposals, maybe both of them can bid it out if possible. Is that
That's
fine?
clear enough, right? Okay. So there's a motion by Mr. Varela, seconded by Mr. Pope. All those in favor, so signify by raising your right hand. Same sign, motion carries. I think that concludes we'll go ahead and adjourn. It is 12:47 PM. Thank you all so very much.
Listen, I was sitting over here as much as I could. You notice?